Good morning, everyone, and thank you so much for joining us. Today is our continuing coverage of the Stimulus Act coming out of Congress late last month. We appreciate you joining us. Today is Tuesday, January 12th, 2021. Still getting used to that. We hope everybody is off to a good start and a good beginning of the new year. Feels a lot like 2020, but I think that there's some light at the end of the tunnel, both in terms of legislative updates that we'll be covering for you and the rollout of the much vaunted vaccine. So again, we appreciate you being with us today. We're going to be covering some new releases from the SBA around the second stimulus and the second draw on PPP loans today. I am Kevin Wilson, and I am joined by my colleagues Angie Trapp, Tracy Clark, and Leslie Bruno. Before we get into the content, just a couple of housekeeping items for folks who routinely join us here in the morning. This is nothing new, but any newcomers, we are happy to answer your questions throughout this presentation. Please put those in the Q&A section that you should see there at the bottom of your screen and not the chat. We record these webinars and host them on our website so that if you do have any questions that come up when we're not live, you can go back and review this material. We'll have both the slide deck and the recorded presentation available there. And the Q&A plays nicely with that recording while the chat just disappears when we end the presentation. You are always welcome to reach out to us at questions@dominionpayroll.com. We will do our best to get an answer to you in a timely fashion. And that's everything, including PPP loans, the employee retention tax credit, some of the aspects of the Ffcra that are still somewhat in force, and any other questions that may come your way. Without further ado, I am going to give the microphone to our, I believe, very relaxed colleague, Tracy Clark, who spent some time away. We've missed you, but are so happy and grateful to have you back.
Well, thank you, Kevin. I appreciate that.
Absolutely.
All right. So I've gotten a lot of questions about the new PPP loans, and I should say that the portal for the first draw, like people who either gave their money back or decided that they didn't need the PPP when it came out in April, but then later on decided, I really did need that. The first draw did open. Lender portals did open yesterday for community banks and for borrowers that were minority or women-owned businesses. So they are open for a select few, and then the second draw will open on Wednesday. The lender portal will open on Wednesday for the same group of people: minority, women-owned businesses, and community banks. But I haven't gotten any firm dates on when it'll be open for everybody. Basically what it said was in a few days. I'm not sure what a few days would mean. I'm thinking next week, but right now that's where we are. So at any rate, the second draw is going to be, it has a little stricter parameters, but this time it's going to be 300 or fewer employees. You have to also show a gross receipt reduction of at least 25% over the prior year period. And I should say that the first draw is going to be subject to the rules that went along with the initial first draw. So the 500 employees, you didn't have to show a gross receipt reduction. All of the things that were in place with the first draw back in April are still in place for the first draw this go round. Second draw is where you actually have to show that reduction and have less than 300 people. For most of you, the second draw will be about the same amount of money as it was for the first draw, unless you are basically a restaurant or any business that has an NAICS number of 72, beginning with 72. Then you're going to be able to get 3.5 times your average monthly payroll. for 2019. And they also said it could be 2020. So it actually could be 12 trailing months of anywhere in between that. But most people had the majority of their payroll in 2019. That's where you have the biggest payrolls, and that's where you want to get your documentation, is from the months that you had the biggest payroll. So that would be, for most people, that's going to be 2019. And it is, like I said, it's going to be the same documentation that you used for the first draw. If you weren't in business for all of 2019, you can certainly start like in June and go all the way through June of 2020 to get your 12 months that way. They did cut the limit off at $2 million. It was 10 million, now it's 2 million. Same, 60% has to be spent on payroll. And again, the second draw will be excluded from income and no expenses will be disallowed. So you'll be able to claim those deductions on that money as well. You have until 3/31 of 2021 to borrow. Okay, I just wanted to put this in there about the expanded PPP covered costs, and this does date back to the enactment of the CARES Act, which was the 1st of April of 2020. But basically now it will cover the costs for any software or cloud computing services, any employer personal protection equipment, and similar costs. So if you had to put up any of those plexiglass barriers or supply masks and gloves and different things like that, that's all covered now. Purchases of essential business goods and supplies on contracts entered in before the start of PPP covered period, and any property damage incurred due to public disturbances that are not otherwise covered by insurance. That also covers us. So to process payrolls, so you can use your whole payroll bill for this. You can include our cost in that as well. There is a simplified loan and forgiveness application for loans under 150,000. So if you're seeking the loan, you don't actually have to prove the revenue loss. You just have to certify that you had one. When you go to apply for forgiveness, you will have to supply the documentation to show that you had revenue loss of 25%. For forgiveness, businesses who borrowed 150,000 or less can submit a one-page certification that details the following. So you need to have the number of employees that you retained as a result of the loan, an estimate of how much the loan was spent on payroll costs, and then proof of qualifying revenue loss if you did not already provide that to your lender. That's nice. There's a lot of verbiage here because this is the biggest thing that I've been answering questions on. This is the ERC, sometimes known as the ERTC, but it's basically the employee retention credit. This is the retroactive one. So I'm going to talk a little bit about what would have been in place for 2020. So this would have been March 12th, 2020 through 12/31/2020. So basically what they said was that on qualified wages, you could claim a credit of 50% from the date of March 13th. And they gave two caveats to qualify for that. So the caveats were this: you either were fully or partially your business was fully or partially suspended due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings due to COVID-19, or you had gross receipts of at least one calendar quarter that were less than 50% of the gross receipts received during the same calendar quarters in the prior year. This period of significant decline in the gross receipts is recognized until the end of 2020 calendar quarter, in which gross receipts are greater than 80%. So for instance, during second quarter, if you were down 50%, that qualifies you. Then the next quarter, maybe third quarter, you were up, but maybe you were only at 70%, you still qualify. If in the fourth quarter you were at 80%, you still qualify. It's not until you're greater than 80% that you would then kind of go off of the eligibility for ERC. The maximum eligible wages per employee was $10,000 for that whole time period. And that could result in a maximum annual credit of up to $5,000 per employee. The other thing that you have to know is that in addition, for employers, that was for employers for under 100. So if you had 100 or fewer employees, then the credit was available on all the wages that you paid, whether the employee was actually coming into work or you had somebody who was staying home on a paid furlough. So that was good for any employers of 100 employees or less. Now, if you had more than 100, it was only available on wages to employees that weren't working. So you did paid furlough, or if your people were on furlough and you weren't paying them, but you were paying for their health care, that also qualified. So I should have said that too, that health care was part of this as well. So PPP and ERC, and this is a big one. So initially they said, okay, if you have PPP, you're not eligible for ERC. And that was easy because a lot of people got the PPP funds. And so, it took a lot of people out of the pool for ERC. But now, as of the 27th of December, they decided that they're going to make it so that PPP borrowers are eligible to go back and claim ERC for 2020. So what you need to understand about that is that paychecks that were allocated to the PPP forgiveness are not allowed to be allocated towards ERC. There's going to be no double dipping for that. And that's also true for Ffcra wages. So if you paid into the Ffcra wages, they're not eligible for PPP forgiveness. They're also not eligible for ERC. But any paychecks that were payrolls that were run during the time that you may have been shut down or partially shut down, but did not have PPP funds, you could be eligible for this. If you had a 50%, if you were shuttered, you do qualify. If you are 50% down for a quarter, you can also qualify. So there's two ways to qualify for this. I know it sounds kind of confusing, and I probably made it a little more confusing than it needed to be. But I would consult your CPA about this. So if you were a business that had to be closed and you were still paying some payrolls before you got PPP funds, or even after, like a lot of restaurants were still required to be partially shut down. I think they're still required to be partially shut down because they have limits on how many people they can have in their facility. You qualify for ERC. So you want to check with your CPA. This could be a big deal for a lot of people now that they've made PPP and ERC able to play friendly together. So this is our recommendation for next steps. First of all, you want to determine if you're an eligible employer for ERC. So see if you meet the required shutdown or gross receipts reduction test. If yes to number one, then determine if there are 2020 wages that are actually eligible for ERC. And then you want to just kind of come up with some estimates for that. Remember, the limit for all of 2020 is $10,000 in wages per employee. And so it'll be 50% of that value. Review your PPP wages to determine if you've paid wages that would need to be claimed, that would be needed to claim ERC and PPP loan forgiveness, because you got to separate those two out. And then that last one, number 4, is talking about how they're going to refund you. There isn't a mechanism in place right now. We're waiting on IRS to give more guidance on that. I have read about they may do something called a catch-up ERC, and basically what they're going to do is apply it all to fourth quarter. So then you would get a refund after your 941s go in for fourth quarter. But those taxes are due by February 1st, so it's not very many days left for that. I think 19. So then I saw some things about, well, maybe that what they would do is allow you to do an amended 941. But there just isn't any clear guidance out there right now. So we're just kind of waiting on that. So hopefully sometime this week, maybe early next week, we'll get some more guidance from Treasury or IRS on how they're going to actually get your money back and how they want it filed. So we're just kind of waiting on that. You can send in a request to questions@dominionpayroll.com if you think that, and you and your CPA have decided, yes, we certainly do qualify for ERC. We're going to need some information from you to get that set up. And I will be back in contact with you after we look at what you've put out there. Okay, going forward, the bill extend the availability of the ERC to qualified wages paid through June 30th of 2021. And it does enhance the program in a couple of ways that are very significant. So they changed the amount of gross receipt decline from 50% to 20% as compared to the corresponding quarter in 2019. So that's a big one. A lot of people did have a decline. So you want to look at that. You can compare the corresponding quarter in 2019, or you can compare to 2020, whichever one. They increased the ERC wage limit to $10,000 per employee per quarter rather than $10,000 per year. And that's a big one too. And then they increased the ERC percentage from 50% to 70%. So for every $10,000, that's $7,000 that you would get back. They increased the large employer full-time employee limit from 100 to 500. So that includes a ton of people. New employers who are not in existence for all or part of 2019 can use the comparable 2020 calendar quarter to determine the extent of the decline in gross receipts. So you want to check into that. I did talk to a client who said that their CPA told them that if they weren't even in existence until midway through 2020, and they were a restaurant, and because they were partially shuttered, they were actually able to take advantage. They should be able to take advantage of the retroactive ERC. So just talk to your CPA about this, because I think there are going to be a lot of people who can qualify for it. And I just want to make sure that you kind of bounce that off of people who really understand your gross receipts and this program as well. So as we go forward into 2021, there are a lot of people who are going to qualify. So just really consider this, because I think it could be a really good program for a lot of people. And you can certainly use this before you get PPP second draw, if you are thinking about that as well. Okay, the idle advance. So there's two things on this. The idle advance no longer reduces your PPP loan forgiveness. So you don't, if you were given $10,000 in an idle advance and you were given $200,000 in a PPP loan, you don't have to take that idle advance off the top. So now you will be able to get $210,000 potentially forgiven. It's not the idle advance doesn't have to be paid back, which is great. It has been replenished, so people can come and get, if they didn't take advantage of it on the first go round, you can try again on the second go round. There are a few more caveats to this. You have to be in a low income area, so a lot of people may not be eligible for the second round of idle that was available to the first round. But you should check into that if you didn't take advantage of it the first go round. Ffcra extension. Leslie, do you want to talk about that?
Sorry, here I am. Yes, I do.
Okay, good.
Hi, hello.
How are you?
I always want to talk about Ffcra. Welcome back, Tracy.
Thank you.
Not that you were really gone, but welcome back geographically.
I appreciate that.
Yeah, we missed you. Okay, Ffcra is still a thing. It has changed slightly. It's no longer, your employees are no longer federally entitled to it. And it's now, but what they're saying is that the tax credits are available to you, the employer, if you choose to extend the paid leaves to employees that are qualified for them. So all the other rules around this stay the same. It still applies to companies who are fewer than 500 employees. You can still offer it to full-time, part-time, and seasonal employees. You'll recall that the qualifying conditions typically revolve around symptoms or waiting for a test or caring for someone who's sick or some other type of COVID related illness. However, there's also that childcare piece, which is important because a lot of schools are still not operating on site. So all of those things remain the same. And you'll recall that there's emergency paid sick leave, sometimes called EPSL or eSick, and then there's expanded FMLA. And I know you guys have heard me say this many times over the past 10 months, but I still get questions. So I'm going to repeat. Emergency paid sick leave is up to 80 hours based on what their normal average number of hours they would work over 2 weeks. And that has 6 qualifying conditions. The one we see the most is that somebody either has symptoms or they are full-blown sick, or they've been exposed and are awaiting a test because they should not be in the office. Those are typically the ones we see for that emergency paid sick leave, and that's up to 80 hours paid, for the most part, paid at 100%, and you get a real-time tax credit for those wages. So all that still remains true. You still get the tax credits through March 31st, unless they extend it. One thing I will note that I do get a lot of questions about is if somebody is at home awaiting test results or at home and they're mildly symptomatic, but they can still effectively perform their job from home, then, and they are, they're like, great, I can still work, then you wouldn't even kick in. FFCRA just wouldn't even kick in. You would just pay them as normal and, go about your, they would go about their regular job duties from home. If you have that luxury, that's a great option here. You don't even have to worry about FFCRA. But if they truly cannot perform their job either from home or they're ill or caring for somebody who is ill, then you could opt to extend them, pay them through emergency paid sick leave, and you would just set up separate earnings codes in our system, and we'll track those separately so you can get the tax credit. There is a cap. It's a max of $511 a day payout for emergency paid sick leave. So if you have some employees that would exceed that, you definitely want to communicate that to them so they won't be expecting, it wouldn't truly be 100% of their pay. If somebody is taking emergency paid sick leave because their children are at home, then they are paid at 2/3 their regular rate of pay. So you would need to track that as well in payroll. And then to just reiterate that FMLA, expanded FMLA, is just for the childcare qualifying reason. That's the only reason anyone can take that leave. It's still up to 12 weeks. It's still paid at 2/3 the regular rate of pay. It's a max of $200 per day, and it still can be taken intermittently, which is a really important distinction. If you have somebody who has kids at home and they can, cobble together some sort of childcare schedule where they can work normal hours Monday, Wednesday, Friday, and then take EFMLA Tuesdays and Thursdays, or work normal hours 9 to 12 on Monday through Friday, but then need to take the afternoon on EFMLA, you can slice and dice that way, and that's really helpful. And again, that's a maximum of $200 a day. So you'll definitely want to communicate that to those employees. Just the big difference, and I wish that they hadn't made it discretionary, because I'm now getting some interesting questions from clients about, they have some employees that might technically qualify for the FFCRA paid leaves, but they don't want to give it to them because they have seen them goofing off on Instagram and violating their quarantine, or they have other performance issues, or this person might have used a lot of just regular PTO in 2020, and now they're asking for paid leave for COVID reasons. I think if someone is underperforming or violating policy, I think you should not use the denial of FFCRA paid leaves as a disciplinary measure. I think you should discipline them as you normally would per your normal, non-COVID policies. It's always helpful to back that up with something in writing. So if you don't have a disciplinary policy in place, or if you don't have a policy in place around written down around, like, when you are out sick, you are out sick, and we trust you to be quarantining and following CDC guidelines, you might want to go ahead and have that in place. But I wouldn't use these paid leaves or the denial of them or cherry picking who to give them to as a disciplinary measure. I think that could expose you to some risk. I think you should decide now, if you haven't already, that you're going to go ahead as a company and extend these leaves through March 31st. As long as these employees are qualified. I mean, you can't just, as in 2020, it's not designed to allow your employees to just call you up on a Monday morning and just self-determine that they qualify for these leaves. That you need to shake loose some sort of documentation from a physician, or some sort of note that they're seeking a test, or certainly if their child's school or daycare are closed, that should be pretty easy to document. But it's not designed for them to just determine that they get to take 2 weeks off. You need to work with them, and I know every situation is unique, and I'm always happy to talk through those situations with any of you who want to send them in. My questions at dominionpayroll.com, or submit it during one of these webinars. We're happy to help you walk through those. So that is my soapbox. I wish they had made them mandatory just to make it actually easier on you guys around some of these unique situations, but it is no longer mandated. I will say this, though, that if somebody used all or part of their e-sick or EFMLA hours in 2020, unfortunately, they don't get a whole new bank of hours. So if I used up all 2 weeks of my emergency paid sick leave, and I used up all 12 weeks of my expanded FMLA, I don't get a new bank in 2021, regardless of the fact that my child's school system is still operating virtually. If I used only a part of those hours and a part of e-sick or a part of expanded FMLA, then I'm entitled to whatever is left over. And you should keep track of those. Our system can track those earnings via earnings codes, but they don't necessarily, it doesn't necessarily look at the balance from 2020 and then give you a nice clean report on 2021. Although, Tracy, we did figure out a way to do that. Am I imagining that from last time? I think we have a report now that we can run to show you a balance.
Yeah, we do.
Okay.
It's the, what is it? Earnings export report.
Yeah, one of our
Earnings register export.
Yeah, that's it.
Say that again, Angie.
The earnings register export.
That's right.
Yeah, and it has everything on there, and you'll be able to see how many dollars you've paid, as well as the number of hours that they've used. And you just need to run it for like 4/1 through now.
The reason is this is based on a calendar year, and our system clears out at the calendar. Well, let me rephrase it. Our system is based on a calendar year. This leave, because it's rolling over, it's no longer a calendar year to date. That's why the system doesn't understand, hey, I still have hours left over. That's why you have to use the report, and then the limits don't work in the system.
Okay, that's helpful. Thank you. Yeah, I think actually a listener pointed that out to us like 2 weeks ago, which was helpful.
Yeah.
So it's a two-way street here. So I think that's all on FFCRA. Hopefully that was clear. And then I can chat about this too. Unemployment.
Okay, good.
Well, I, to the extent that I actually admittedly haven't done a ton of research on what's happening, aside from visit a couple of the state employment agency sites, employment commission sites, including our own here in Virginia, to see what's happening. And maybe some of you listeners out there have some anecdotal experience with what's going on, but I don't know much more except for this right now in terms of the new, what the the new law is providing, aside from an additional $300 per week through March 14th, possibly longer. We'll see. March seems to be their stopping point for now for these programs. It will expand coverage for independent contractors, self-employed individuals, and gig workers still, so that's good. But as you know, unemployment is delivered by state, so it's different in every state, and so you'll need to have, if you have employees who are interested in unemployment because you had to lay them off or furlough them, they're going to need to go and just file a claim and see when they get that money. I don't know, Tracy, if you have any other info to add.
I really don't. I haven't seen anything, but I also haven't looked. I've been mostly looking at just ERC stuff and PPP.
All right, well, I will, I apologize. I will do a bit more research and reach out to our friends at the VEC. I see Mark's not on here today, and see if we can get more guidance. But the money is coming. If it's not already out there, it's supposed to be coming.
All right. Super. Are you ready to dive into questions?
Yes, and we got quite a few out there. You guys ready?
Yep,
Ready.
fire away.
Okay, from Jennifer. Any idea how nonprofits who don't have gross receipts would qualify for the second draw?
I don't. I did see that some nonprofits, were some additional nonprofits were available. I think you're going to have to reach out to your lender about that one.
Okay, and then Todd asked, any more information known with applying for a business that started in 2020?
So the only thing that I saw, and they're still saying that February 15th, they're putting that kind of in the sand. However, ERC doesn't seem to have that same caveat. So you may be, that may be available to you if you were shuttered or partially shut down. ERC may be the way to go.
Okay. Then David asked, are the other costs for workers' comp insurance eligible for forgiveness? Are they
No,
costs? Okay.
I don't think so. I think that was, they didn't add that.
Yeah, I think I remember from last time it wasn't covered. And then Mindy asked, have they changed the eligibility retroactively for 2020 ERC, or are you still not able to take advantage of this credit if you've received a PPP loan or PPP funds?
So the eligibility requirements are the same, but you can take advantage of it if you have PPP.
And then Rose asked, would PTO paid out to active and terminated employees qualify for ERT? I think she means ERC.
Think so. I think it's all wages that are paid.
Yes. Our friend Mike asked, on one of the first slides where we need to show we were able to keep or pay employees based on the PPP2 loan, can you elaborate? Not clear on the proof and the pudding. We had to close for 2 weeks, COVID, no revenue, but we were able to still pay our employees. If we do this again, not sure we can. So to take the money now, just in case, whether we need it or not.
Keep employees based on, I think that what they're going to do is it's going to be very similar to the round one where you have to compare to 2 reference periods. I think that's the way they're going to do it. But for people who have to be shuttered or they have a mandate that keeps their FTE lower, I believe you're still going to be able to claim safe harbor.
And then Rose, under the new affiliation rules for the hospitality and restaurant industry, do I understand it correctly that each location can apply for a separate PPP loan as each location has its own FEIN?
I think so, but the limit now is $4 million. Is that what you're thinking, Angie? I think we were talking about that yesterday.
Yes,
The
that's the
people
way
who are, yeah. I think altogether, you can't get more than 4 million.
And then Rose has a second question. For the second PPP loans, do we look at our current employees count or our pre-COVID employee count?
So just like with the first draw, they ask you for the number of employees, and it's going to be at the time of application, I believe.
And then David asked, for PPP2, are the forgivable funds still available? I can't even talk now. Available to pay people on paid furlough?
I believe so. As far as I know, they're keeping all of the same qualifiers in place. I haven't seen anything different.
Okay. Jennifer asked, for FFCRA, do nonprofits who do not pay taxes have any way to recoup the money they paid to employees who are out on leave due to COVID illness, their own or family members?
I don't think so.
What I think but it does apply to them though. So they must be able to, maybe they file it quarterly.
Maybe they can file a 7,200 or.
That's what I think. I think that's the answer because it does apply to them.
It does apply to nonprofits?
Yes.
But
Okay,
it says here, it says nonprofits who don't pay taxes.
And it's a tax credit, so that's why I'm unsure. I would reach out to your CPA about that.
Yeah. I'll look more into it.
Because I know that if you overpay, they will give you a refund, but it all goes in on your 941s. I don't know about that one.
Okay, then Mike asked, sorry, can you repeat, putting aside a personal business decision, the requirement to pay employees under one of the 6 conditions ended December 31st, 2020, correct?
The requirement, the mandate, but you can still do it. You can still take advantage of the tax credits through the 31st.
Okay. And then Ryan said nonprofits do pay payroll taxes on 941s.
Not all of them though, do they?
No. So
right. Some do.
Okay. Can you explain the instructions below taken from the second draw PPP application? For purposes of calculating average monthly payroll, most applicants use the average monthly payroll for 2019 or 2020, excluding cost over $100,000 on an annualized basis, as prorated for the period during which payments are made or the obligation to make payments incurred for each employee.
So basically what that means is that you have to exclude any amount that's over $100,000. And the part about the prorated for the period, let's say you only had 6 months, but you paid somebody in that 6 months $70,000. They would be, if you prorated that out over the entire year, they would be above $100,000. So you're going to have to take away the amount of money from that $70,000 that would have been above $100,000 had you annualized it. Most people don't even have to worry about that. They have a whole year, so it's not a problem.
What documents do we need to provide as proof for payroll cost calculation?
For the PPP loan, you're going to use the CARES payroll protection or paycheck protection program report.
What if they're not our clients?
Yeah, that would be for our clients. Otherwise, you're going to have to show them payroll registers, I guess, and show where you added it all up for the year and divided by 12 to get the monthly.
And then Mindy asked, if our CPA determines that we are eligible for ERC, how would you like us to notify DPS?
Send in an email to questions@dominionpayroll.com and I'll get back to you.
When you have related businesses like own 5 restaurants and only 2 have decreased in gross receipts, does the new PP and ERC apply only to those applications or will all apply?
I assume that depends on your EIN number, right? When you
Yes.
think
Yes, because it
that
would
they
be
all have a
filed by,
separate one.
so we need a little bit more information on that one. Todd said also, do we need to do anything special right now if we anticipate being eligible for ERTC this year?
Yes, you'll need to send in at questions at dominionpayroll.com. Just let me know so I can keep you in the loop.
And then Ed asked, if you didn't take the EIDL last year because of PPP and the reluctance to apply due to the forgiveness issue, can you apply now?
You can, but you're gonna be under the new parameters for EIDL.
And then Linda asked, any update on the SBA definition on gross receipts and payroll taxes?
Linda, I sent that to you yesterday, I think. It's all about revenue.
And if you don't have that, send another question, then we'll take a look at it. If the ERC is retroactive for 2020, can we get a credit on payroll prior to March 15th or prior to February 15th?
The payroll the wages have to be paid after March 12th. So March 13th, I think, is the first day that it's actually eligible.
Round 2 PPP. I have 2 stores. One store lost 44% gross receipts while the other store has not met the qualifier. Since one store qualifies for gross receipts, can I apply for PPP round 2? Both stores are under the same tax ID.
Probably. You're going to just show it as a lump sum.
I would think it would have to be a total.
Yeah, it would have to be a total. I mean,
So,
I guess if you have the
because
same
it's-
tax ID, is everything together?
Uh-huh, yes. I would think because it's all one FEIN, you have to share, and that's how you report your gross receipts. You would have to have it with all, you'd have to show the decrease on that total, not just one store. Now that's my thought. Anybody disagree?
No, I think that sounds reasonable.
To clarify the payroll cost calculation, if someone's annual compensation is 85K, but they received a bonus in one payroll, that if we analyze it would bring the employee's potential compensation to over 100K, what would the amount we claim as payroll cost? 85,000 or 100K?
100.
When you have related businesses, like own 5 restaurants and only 2 have the decrease in gross receipts, does the PPP and ERC only apply to those locations or will apply to all? Update, and this is her update to this, all under one EIN, just separate locations, but only 2 locations have decrease. Again, with this,
Yeah.
I would check with your accountant or SBA, but I am going to say because it's one federal ID number and your gross receipts are based on that federal ID number, you have to meet the decrease in gross receipts on the total, not just by stores. Does GPS have a report set up to file for PPP2 loan?
It's the same report that you used for the round 1. And in fact, if you use the same lender, they may still have your same documentation, but it's the CARES Paycheck Protection Program report.
Well, that is all the questions out here right now. While we're waiting a minute, does somebody want to jump in about tomorrow's webinar and then I'll talk about Thursdays?
Yeah, I'd love to share that tomorrow we are doing another episode of The Beacon, and we are going to be focused on what employers rather, are doing to help their employees navigate childcare and education concerns of their employees. got a great guest from the HR department at Kiter and the CEO of Light the Music, an education startup here in Richmond, joining the conversation. And I think it should be a really interesting one. Obviously, that line between work and life, that whole balance thing that we talked about in big effusive terms in 2019, that line clearly got blurred in 2020. And obviously there's a lot to be done on the part of employers to help folks navigate that. So that's tomorrow at 11, and I do hope everybody will join us.
Great. And then on Thursday at 11, we are going over the HR cabinet in our system, performance reviews that are embedded in the system, and then ESS. And we're going to show how to notify employees of documents that they have to sign and acknowledge. So we're going to go through that whole HR performance review and employee self-service section. And then Todd did pop in. I got pulled away. Would you mind re-answering mine about, do we need to do anything special right now if we anticipate being eligible for ERTC this year?
You need to send in a question to questions@dominionpayroll.com, and I'll get back to you on what we need.
And I want to jump in back onto that nonprofit FFCRA question. So nonprofits, sorry, it took me a minute to get my brain back to 2020. Nonprofits do pay Social Security and Medicare taxes. And so for the most part, so I think those are the ones that you could defer and have refunded. I still think you should talk to your CPA just to
I
make
think
sure.
she was one that didn't pay. They didn't pay that. So
Didn't
what
pay
can
that.
they do?
Yeah, I don't know. So yeah, I mean, but it said there's nowhere that, well, in my quick search just now, I didn't see the exact answer, but I would imagine there's got to be something they can do. So if you think that you're going to offer the leaves through March 31st, I would talk to somebody, a CPA who can help you answer that question.
Okay, and then Jennifer asks, well, she says, thank you. We do pay Medicare and payroll taxes, so I can recoup those, and I will talk to our CPA. I appreciate you all.
And we appreciate you, Jennifer. Thank you for listening.
Okay, and then Ryan says, I don't know any nonprofits that don't pay Medicare and Social Security. It's a common misconception. Nonprofits only don't pay income taxes.
Then they should be able to get it back.
Yeah. So they don't pay federal unemployment insurance, but they might pay state level. So,
Okay, yep.
So yeah, thank you for clarifying that. I'm back in the know about nonprofits and FFCRA. Goodness.
Okay, well, that is all the questions in the queue. So again, we are done for Tuesday, and we will see everybody tomorrow at 11 o'clock. Thank you.
Thank you. Have a great
Thanks.
afternoon.
Everybody.